It's interesting that meme coins right now are serving a similar function to what NFTs did in 2021, except that they have a much wider distribution. While NFTs are owned by maybe a few thousand holders, tokens can be owned by millions. They have much lower barriers of entry. So in a sense, meme coins are a more democratic version of NFTs. Hello everyone, welcome to Crypto with Cami, where we go through all the main headlines in crypto and DeFi in the past week in 30 minutes or less. This is the show for the week starting March 25th. These are the headlines and topics we'll cover. Meme coins continue to be all the rage. Sam Bankman-Fried was sentenced to 25 years in prison. Blast project Munchables was exploited for $63 million. And there's a bunch of regulatory news with Coinbase, KuCoin exchange, and another lawsuit about airdrops. So let's start with meme coins. Meme coins is the main topic I want to talk about today. It looks like they are shaping up to be the hot trend and hype of this cycle. I'm not sure if it'll hold for the entire bull run, but so far there's no question that these basically useless tokens are driving all the action in crypto. They're consistently among the most traded coins each day, and some meme coins like WIF have skyrocketed into more than billion-dollar valuations. Just this week, if we look at the best performing tokens in the past 7 days, we see that the second best performing token was Duck with Hat, up almost 43%. Then fourth place is Doge. Bonk is in the top traded coin, Shiba Inu, and so on. Meme coins just have kept, at the top of the rally. So this is really interesting to me. I think one take is that meme coins are the honest version of ICOs. So if you'll remember, initial coin offerings were all the rage in the 2017 bull market. And I remember back in that time, so I was covering crypto for Bloomberg at that time. And ICOs was like the hot thing, the trending thing. And there was this one ICO token, which I always remember, and it was called the useless Ethereum token. And funnily enough, and I'm grateful that the website is still up, and it says it's the world's first 100% honest Ethereum ICO. It says the UET, useless Ethereum token ICO, transparently offers investors no value. So there will be no expectation of gains. You're going to give some random person on the internet money, and they're going to take it and go buy stuff with it. Probably electronics, to be honest. Maybe even a big screen television. Seriously, don't buy these tokens. So this was pretty crazy to say back in the ICO era. Remember at the time, teams were putting up these elaborate white papers with all the tokenomics and complicated equations and code they were going to use for their tokens, with grand roadmaps and plans of like using their tokens for supply chain finance, or in the dentistry industry, if you guys remember DentaCoin, and all that stuff. So useless Ethereum token was like, nope, this is not used for anything. Give us money and we'll use it to buy flat screen TVs. It feels like right now all meme coins are basically useless Ethereum tokens, but they're upfront about it. Or more accurately, useless Solana tokens or Base tokens or BNB tokens. Nobody's pretending that there's any value beyond a funny name, a funny ticker, and logo. So what's different from past cycles is that it's a lot cheaper to launch these tokens. So the opportunity cost to launch a JO BUIDL token on Solana is a lot lower. I think that has led to a change in dynamics, and credit here to Yatsu from Animoca and Jillian from Variant, who chatted about this with me in the past couple of days. So what's happening is that meme coins are turning into a way for people to express their thoughts or allegiances around something, which explains the rise of politics and religion-related tokens like MAGA, the aforementioned Joe Biden, Elizabeth Warren, and Jesus Coin. So when others buy these tokens, it's like buying a ticket into a club of people who have the same worldview, or just very basically who want to be in on the same joke, or who think that dog with hat is extremely cute and like the absurdity of owning a token just for that reason. Unfortunately, some people were creating pretty hateful clubs, giving tokens racist and misogynistic names. So my view here is that while I really hate racist tokens and don't understand why anyone would want to buy them, I love that blockchains allow for anyone to issue whatever token they want. It's similar to kind of the free speech argument. It's like I'm paraphrasing, but the saying is, I hate what you're saying, but I will defend to death your right to say it. I think, the same thing goes for a radically free financial system. Anyone should be able to issue whatever they want, except when it borders into something illegal, like explicitly inciting violence is a case where free speech does not protect that. And, neither should a token that is inciting violence. But other than that, I think anything goes. Anyone should be able to issue whatever token, even if it's racist. Unfortunately, people will do that. But, that's the price to pay for having a permissionless open financial system. And I think that outweighs that benefit of having this permissionless open financial system outweighs the fact that people will issue stuff that we don't like. And I also think that centralized private companies like TechScreener, Uniswap Labs, who have platforms for trading these tokens, they have the right to filter and unlist tokens that don't align with their values or terms and conditions. Likewise, if there's companies that do want to offer that on their front ends, of course, they can do that. Yatsu here had an interesting take on racist tokens, and he said that he thinks that they're a reaction to extreme woke culture. So very personally, that's something that I can also align with, but I wouldn't do that with racist tokens. So it's interesting that meme coins right now are serving a similar function to what NFTs did in 2021, except that they have a much wider distribution. So while NFTs are owned by maybe a few thousand holders, the whole value prop of NFTs is that they're scarce. Tokens can be owned by millions. They have much lower barriers of entry. And because they're fungible, there's, a much higher limit to how many tokens will be issued. So in a sense, meme coins are a more democratic version of NFTs. Jillian from Variant said interactions happening around meme coins are like a Web3 version of social media, which I thought was an interesting take. So the social media network in this case is the token itself, and all interactions around it happen in a decentralized way across many other platforms. So you buy a dog with hat token and you communicate and interact with other holders on Twitter, on Telegram chat, maybe on a Discord channel. But the whole network is based around holding this token. Another interesting development around meme coins is that they're evolving into something that's not entirely useless. And so the token spearheading this evolution is Degen. So Degen was issued in January on Coinbase's Layer 2 base and was distributed to users of Farcaster, the Web3 social media network, through airdrops. So if you were engaging in Farcaster, you got a Degen allocation. But now Degen is bleeding into other communities outside of Farcaster. For example, Dracula, Pearl, and even Sora, where you can now mint NFTs with Degen, are some of the other Web3 apps who have integrated Degen in one way or another. So that's pretty interesting. So there was this, Memecoin Degen, which went to Farcaster users, but now other apps are using Degen as a way to bootstrap users. So by integrating Degen, you are in a way leveraging Degen holders and incentivizing them to use your dApp. So I think that this is the first instance we've seen of something exactly like this happen, which is really interesting. And then the next step for Degen is that it's actually launching its own chain. They're using the Arbitrum Orbit SDK, and they're launching a layer 3. So it's a chain that's based on a layer 2, which is now called a layer 3. And so the idea around this is that it promises to offer lower fees than Base, which had a sudden spike in fees because of all the activity that's happening around it. So really, really interesting developments here with all the Memecoin craze. What do you think? Am I mid-curving Memecoins? Are they just a symbol of degeneracy and mindless speculation? Or is there something actually deeper happening here? What do you think? All right, now on to the next major headline. Of course, biggest probably news of the week is that Sam Bankman-Fried was sentenced to 25 years in prison. That was shorter than the 40 to 50 years that federal prosecutors had sought, and also shorter than the maximum penalty for him, which was 110 years. But it was also higher than the 6.5 years requested by SBF's defense lawyers. I looked up at a ranking of the white-collar criminals with the highest prison sentences, and he would rank as a third, tied with the Enron guy. So that's that. He had been charged with 7 counts of fraud, conspiracy, and money laundering back in the fall of last year, and today marks the final conclusion of the whole SBF trial. And I think at least I'm over SBF. It's good to see a conclusion to the trial, but I don't think he bears a lot of influence or weight in the crypto industry right now. To me, this sentence is a sentence on a white-collar criminal, but it's not a sentence on crypto itself. SBF, in the end, used the same old traditional financial rails that all the other white-collar criminals before him used, except, he just happened to be moving crypto assets on those rails. What he was able to do, wipe out $8 billion, had nothing to do with crypto itself. It just had to do with him committing fraud with his customer funds. So that's my take on SBF. Next, Munchables, a project based on the Blast Layer 2, was exploited for $63 million. So it took 2/3 of Munchables' total value locked. So TVL slid from over 96 million to 34 million after the exploit. And then Blast pseudonymous founder said that the funds were secured and that the perpetrator voluntarily returned the assets. Interestingly, the hacker was confirmed to be a former Munchables developer, so it was an inside job. The other interesting angle here is that The incident gave rise to a fervent discussion regarding how Blast should respond, because Blast has the ability to reverse malicious transactions and exercise control over its bridge. So the debate here was, should it actually use those faculties? Should it use the fact that it's centralized to make sure that it's protecting its user funds? Of course, this is the classic permissionless versus this is a classic debate of how permissionless should blockchains be. Should code be law at all costs, or should user and consumer, or like customer investor protections go before that, be prioritized before that? Let me know what your thoughts are here. I'm pretty torn, to be honest. I mean, the fact that that Blast was already centralized maybe would tip the scale to say, if it already had those powers, why not use them? Otherwise, it would be kind of like a show of decentralization if they didn't. But at the same time, it could set a bad precedent, that whatever happens, the chain can be rolled back, that it can be that the team can interfere with transactions on the layer 2. I think it's a pretty tough call to say what's right here. Okay, moving on to regulation news. A U.S. judge ruled that the SEC lawsuit against Coinbase can move forward. So a federal judge in Manhattan said that the case between the SEC and Coinbase should move forward because, according to the judge, Coinbase has operated as an unregistered intermediary of securities, specifically because of its staking program. Because of that staking program, they argue it engaged in the unregistered offer and sale of securities. Next, SEC-related news. The SEC is facing a lawsuit that is seeking to exempt airdrops from securities classification. So this is pretty interesting. The DeFi Education Fund has teamed up with the Beva Collection, a small apparel company, in a bid to get regulatory clarity from the courts on airdrops. So what the DEF is arguing is that the Beva airdrop doesn't constitute an investment contract because there was no investment of money, as is the case with most airdrops. You're not investing money. You are getting tokens for free. So this is something to keep an eye on. The conclusion of this lawsuit might provide a lot of clarity for Web3 and DeFi going forward. Other regulatory news: the KuCoin exchange faces criminal charges. Authorities are claiming that KuCoin didn't comply with U.S. anti-money laundering laws in pursuit of growth. Okay, we'll go quickly through the next set of headlines. Ethena Labs announced the airdrop date of its native token ENA. Starting April 2nd, 750 million ENA tokens, or 5% of the total supply, will get airdropped. Related to that, Mantle is launching a rewards portal, which will give stakers of the Mantle token additional Ethereum shards rewards. Reminder that Ethena is calling its points shards. Okay, AltLayer launches the staking of its ALT token. The rollup provider aims to provide fast finality with its Match Alpha product built on top of EigenLayer. AI crypto news. Fetch, SingularityNet, and Ocean are merging assets to forge a shared tokenomic network. So the three projects are hoping to accelerate decentralized AI development. Next up is another merger of sorts, or I should say collaboration. Arbitrum and Azuki are joining forces to create a new anime blockchain. So an anime chain is going to be a platform for building all of Azuki related ecosystem assets. Now there's TradFi and institutional investor related news with BlackRock's tokenized treasuries fund BUIDL. So this fund has attracted $250 million in its first week. This shows really a lot of interest from institutional investors in a tokenized fund. Super interesting. And it puts the BUIDL token as the second largest tokenized US Treasuries fund behind Franklin Templeton's on-chain US government money fund. And the BlackRock's growth of this fund has propelled the market cap of tokenized treasuries funds to an all-time high above $876 million. Another BlackRock-related news is that BlackRock CEO Larry Fink said that the SEC classifying ETH as a security would not preclude spot Ethereum ETFs from entering the market. So super interesting development here. BlackRock is becoming one of the most bullish TradFi institutions when it comes to crypto. It's really going all in on crypto. And so is Nomura. We've had a couple of Nomura-related news recently. Nomura's Laser Digital unveiled the institutional Polygon Fund, where investors will earn yield from validating Polygon chain. So really interesting stuff here. So that's it for this week. We had, super interesting week. Let me know what you think about all this news. What do you think about Memecoins? What do you think about the Munchables exploit? Should Blast have interfered here? And please share, subscribe, like, all that good stuff, and see you next week. Have a great weekend.